Here's the contradiction this quarter. Listings are sitting near decade highs. Buyers have choice. Sales volumes are modest, and yet price expectations just jumped sharply. 30% of Kiwis now expect house prices to rise over the next year. That is almost double last quarter. High supplies, soft turnover, rising optimism. Either this is the early phase of recovery, or sentiment is running ahead of structure. To unpack it all, I'm joined by Nick Tuffley, Chief Economist at ASB. And he's not analysing inflation, he's practicing Tai Chi, which feels appropriate because right now the housing market looks less like a sprint and more like a balance exercise. Nick, let's start with the tension. What specifically triggered the jump from 17% to 30% in your survey?
That's actually a really good question. Look, to me, it's more a case of how did sentiment manage to rise at a time when the interest rate expectations changed markedly in the survey, and we've actually seen mortgage rates increase. So to me, it's actually quite a resilient result to see house price expectations lifting when we've seen a massive drop in the number of people who think that mortgage rates will go down and a jump in the number of people who think mortgage rates will go up over the next 12 years. So despite the fact that people are a lot more wary about higher interest rates in the future, price expectations lifted up. When we're looking at what's happening in the market, there's perhaps not a lot of signs in the market that would be giving that sense of optimism to come through. So it may be that people are sort of looking ahead and going, the economy is going to get better, surely the housing market's going to follow.
Yes, but I'm talking to one of the great minds in New Zealand economics. Are these people answering your survey using logic?
I hope that when people are answering the survey, they are really using the balance of their opinion coming through, and people do tend to pick up on what's happening in the market. Look, we do notice that you generally do tend to get that sort of pick up in house price expectations when the market itself is going in the same direction. It's pretty fair though that in the early parts of the year, at least the January sales figures showed that the market was still pretty flat after being sort of fairly steady for quite a number of months before that as well. So fingers crossed, this is basically that sort of early sign that we are about to see a bit of a shift up in the market. But it is just coming at a time when you are seeing that interest rate story change a little. Look, you can still get quite a low mortgage rate, but you have lost that ability to get like a really cheap longer term rate because those rates have been creeping up since November last year.
I think we have to have disclosure there though. January, pretty much everyone goes on holiday, so the numbers are generally down. I saw a competitor of yours yesterday actually drop interest rates as well. So does that indicate potentially that people see with our talk that the OCR is going to go up at the end of the year, that we have reached the bottom?
What we generally see over January is, yes, when you look at the outright number of sales, it's usually relatively low, but economists do like to sort of make life more difficult for themselves and try and do fancy things. So when you do try and adjust the data for the time of year, those sales are relatively flat. So just accounting even for the fact that January is a weak month, we can look at that and go, okay, well, how does that kind of compare to the months before that? And look, it's pretty steady to down, even when you allow for the fact that January is usually a pretty weak month. Look, we've been hearing sort of anecdotes of things, shifting a bit more. We certainly did see late last year a bit of a jump in basically sort of like lending commitments, and some of that was for new properties rather than just people running around doing that great game of musical chairs that we saw late last year, which was switching banks to get a big cash contribution coming through.
But you have talked about how it's a buyer's market, and if inventory remains high through early 2026, can prices realistically accelerate?
Well, that's where I think there's perhaps a bit of a tension in what the survey is saying and what we'll see in the short term. Look, we don't see there being much of a change in the fact that there is a lot of supply on the market. There's still a fair amount of building activity that's happening, even if it's slowing, and we're still seeing the number of new listings coming onto the market is still greater than the sales that we're actually seeing. So yes, whilst there are some people who take their home off the market, at least for a period, even allowing for that, we're still seeing that inventory level hold up. Look, for prices to rise, look, we do really need to see the sales turnover start to pick up a bit more, so that we're getting less inventory. People have got less choice, there's more competition, and then we're back into people having to stampede through the open home with a helmet on just for safety reasons, because of all the other people that are barging through at the same time. So we're certainly not at that dynamic, but you do need to see greater buying interest coming through in that sales turnover lifting to really support that lift in prices going forward.
Really noticeable looking at your latest report, which you can get on the ASB website. And if you like our content and the fact that we're challenging Nick and everything we do, that we do this all the time, hit subscribe here. You won't regret it. The South Island next shows strong price expectations, but it actually has been pretty good for the last 18 months or so anyhow.
Yes, look, I think that's where in the survey, the fact that you've got sort of reasonably resilient, positive results in the South Island, it is sort of reflecting the reality on the ground there, particularly when you're getting into the bottom half of the South Island, because you have seen prices going up. In the case of Southland, the most recent figures that have just came out show nearly 10% price increases over the last year. Otago is gaining, Canterbury is gaining. It's also reflective of the fact that those areas have been doing fairly well economically. You've got relatively low unemployment in those regions. Basically, Otago is just like awash with tourists, so it's pretty difficult to find anywhere to stay as it is because of that. So it's a good story economically there, and that's sort of really being reflected in those housing markets. It's been a case of not only did they not fall as far during the tough times, but they've also been lifting as well, which really puts regions like, say, Wellington, which had a sharp fall and is still falling, just really puts that into contrast.
Yes, but if your unemployment figures remain elevated, how fragile is this renewed optimism throughout the rest of the country?
Yeah, well, I was personally quite surprised to see the price expectations lift up. And we do, I think, need to see that housing market recovery sort of coming through a bit further. Do need to see employment start to sort of really pick up. We've seen the early signs of that coming through, and that will help support both incomes, but it's also that job security and actually flow through into confidence in buying. I do think, though, that within the survey, look, one thing that's still really standing out is for over the last year is look, the balance of people who think it's a good time versus a bad time to buy remains pretty high. Look, it's actually higher than what it was during the times when we all went sort of crazy a few years ago and voted with our mortgages that it was a good time to buy, or we certainly went out and bought. So you've got that really sort of strong feeling that it is a buyer's market right here, right now, in a way that we haven't seen for a time. And it just ties back to just the amount of stock that's around. If you're wanting to buy a house at the moment, you've got heaps of choice. You're not really having to compete that often with other people that seriously in the way that we've seen during the boom times, when you just get desperate and you close your eyes and wrote a big number down on a piece of paper. So it is really good buying conditions. And if we do get that sort of lift in employment, at a time when interest rates are relatively stable, we should start to see that housing market looking more solid as the year progresses.
What is the single structural risk buyers are underestimating right now?
One thing, when you're looking ahead over time, the one thing I think we do need to be cautious about is, back in time, there was always that, let's get rich, we can buy a property, it's just going to keep going up in value all the time. And when we did have a market where we were very constrained, where the Resource Management Act making it very difficult to build quickly, predictably, and often, had quite a lot of costs associated with it as well. Going forward, if we're doing a lot of changes around the legislation, and also during a time at the moment when migration flows are relatively low, we do seem to be doing a better job of that sort of supply of new building, sort of keeping up a bit better with demand. If we do see that continuing into the longer term, we're less likely to see prices galloping away in the way in which we've got used to. And just remember also, for those of us with some grey hair or less, we went through a period from, say, the late 80s, early 90s, down to that COVID period where all that happened to interest rates over time was they trended lower and lower and lower, and then we got near zero and we've sort of seen that impact on share market valuations, properties, kind of play through over about 3 decades, but it's pretty much run out of steam now as well. So you've got some quite structural changes in the background that means we've got to be a bit cautious about projecting the past and what we've seen happen with house prices going forward, and sort of like banking on strong capital gains just because they've happened in the past is not necessarily going to be the thing that turns out.
Nick Tuffley, Chief Economist at ASB, thank you very much for your time. So we end up with a delicate balance: high inventory, cautious turnover, rising price expectations. If sentiment moves faster than income growth and job security, this recovery becomes fragile. And when we look back at this quarter, will it mark the beginning of sustained lift, or the point optimism briefly outran fundamentals?